have selected some questions with the chat. So the first one is about Anne-Laure has given answer, but Stefan and Christopher ask, they were surprised actually how to explain that there is no trend. It is because the CBCR are not useful. So I interpret a little bit that question, but what do you think about that? How do you explain the absence of trend? Is anybody want to give an answer? Maybe the author of the report.
I could have some answers, but
yes, okay. Let's go.
I mean, certainly not exhaustive answers, but first of all, this is still early days. You know, things take a lot of time. You know, when you're familiar with NGO, civil society action, you know that you go from situations where nobody recognizes situation to a situation where maybe things are recognized but have not changed. No, that's called brainwashing. And then you need to push again to make things really happen. So I think we're in the midst of the process, we're in the middle of the process, and there's not been, correct me if I'm wrong, so many reports doing what the EU Tax Observatory is doing today. So you need a number of reports like this, and you need all the work around it to actually change behavior. And if you add that on top of the fact that, well, that's basically one point I was making earlier, that tax evasion, or call it tax optimization if you wish, is a world industry. You know, like all businesses in the world, financial, non-financial, do it, or many do it. So, you know, it's you're talking about huge trends here. So it's not happening overnight, but that doesn't mean that CBCR country by country reporting is not useful. Quite the contrary, it is indispensable.
Yes, I understand. The name and shame, it takes a long time to be implemented.
Indeed.
We have also some very specific remark about, for instance, Nadja and Guillaume. They ask about the list of tax haven. They don't understand why the author consider a specific list. Is it important or not? So this is a very specific question, but of course it is important. There is also a question about the European list, the official list of tax haven. What do you think about the official list? Maybe Manon has an idea about that. So how to define a tax haven, how to build a list, if you want to react about that.
Yeah, well, first of all, if I may, on the first question, it's been hinted a little bit in the chat, but one of the main reasons as well is that clearly one of the big issue is that those data are hard to collect. It's only maybe the third report of such collecting and analyzing the data. It's a lot of work. It's not easy to interpret it. It's hard to even find the data. So as long as we don't have a common database, it's not done automatically, and it's not followed by immediate policy answers, for sure it will take time. But I also believe that it will be a little bit different for other type of sector of activities, because for other activities, then it will be, I think, somehow for large multinationals that have more activities, it will be a little bit easier, because we will see then for Apple or other companies, it will be there will be higher discrepancies, I think, so it will be more useful. Now on the list of tax havens, so up to date, I have to check in mind, it's 14 or 15 countries, something like this, the list of EU tax havens. And obviously you don't have any EU countries, so you don't have Luxembourg, you don't have Ireland, you don't have the Netherlands, you don't have Malta, although they would fit the or meet the criteria of the EU. But also keep in mind that the criteria of the EU are very, very weak, and they're more, and that's why it's called, by the way, a list of non-cooperative jurisdiction. So for a long time, tax havens have been defined more in terms of information that they were exchanging. And it would be easy to meet the criteria, by the way, for tax havens just by exchanging the information in between tax havens. So that would be enough to get out of the list. But you don't have such criteria as the effective tax rate. We've been hardly fighting for it at the European Parliament level. We're tabling amendments on a very irregular basis, still not managing to get the majority in the Parliament, although it's progressing. But I do think that what the Observatory has been using, both the effective tax rate at 15% and also the use of the profitability rate, are two useful tools to actually measure where the tax havens are. But keep in mind, there's no common acknowledgement, common understanding of a criteria for tax havens. Everyone is doing its own list. I personally, because that's also where I come from, keep using the ones from the NGOs, in which you have obviously much more countries, and you have the most relevant one. You don't have, for example, in the European list and the French list, you had Botswana for a long time, which obviously has nothing to do with tax havens, with being a real tax havens, and you don't have Cayman Islands, Bahamas, and all of the other countries you can think of, and in particular Ireland or Luxembourg. So having a common understanding and common definition of tax havens will be a first step. We've been working on it for years, but I can say that we're still not there.
If I can add something quickly. Yes? Okay. Can you hear me? Yes? Okay. If I can add something on the tax haven list, from a policy point of view, I understand that you need one single list because you don't want Botswana to be implied to be listed as a tax haven when it's not, and so you don't want to pressurize, wrongly put pressure on some countries. But let me give you the researcher perspective. Whatever list you use, you always find the same. I mean, it doesn't change the main patterns and the main findings, so it's super important. The big patterns are always the same. There is a very large profit shift, artificially profit shifting, and it's been the case for a very long time. And there is a concentration, so tax havens are not always the same, and there is a lot of heterogeneity, and there is a concentration of a few jurisdictions. Those are the big patterns that you want to take away. So from a researcher perspective, whatever list you use is... Ok, vous m'entendez mal?
Oui. Yes, sorry. It's not clear.
Et là, vous m'entendez mieux? Non? Ok, ben je vais arrêter alors.
No.
Maybe try to remove your headphone, Anne-Laure, if that helps.
Est-ce que vous m'entendez mieux? Non. Bon, ben je vais pas vous ennuyer.
Yeah, no, you can finish your. It was acceptable, not very nice, but acceptable. So let.
Ok. On me dit de retirer la caméra aussi, ça marche peut-être mieux. Sorry, the second, yeah, very quickly on the trend. In the paper I was mentioning, co-authored with Gunther, we actually find a slight decline of activity. So it's interesting because it gives you also a reason why, I mean, an additional reason why you want to account for some characteristics and you want to make the figures a bit less debatable. But in our work, we actually find a slight decline, but interestingly, we find a high concentration. So a higher concentration, it means that some of the jurisdictions that were attracting banks' activity may have decreased this activity. I mean, the banks may have removed their activity from some little jurisdictions, and the big players have actually increased their market share. So that's super interesting too as a pattern. I'm done.
Okay, thanks. Thanks. Sorry for the sound. It happens. We have plenty of questions, and do not hesitate to contact the observatory. Of course, you can send them an email. Mona, Giulia, will answer. If you have a specific question, do not hesitate, of course, by email. We have also a question. Yves asked about the Swiss bank. We know about the Swiss link, but you do not mention the Switzerland. So what do you have to add about Switzerland?
Yes, so I will take this question. So as was mentioned, the data is not really easy to get, and there is data for Credit Suisse and for UBS, but the problem is that this data is very limited because this directive has an influence only on the European banks. And since the Swiss banks, they are in Switzerland, so they are only obliged to make a reporting on the European part of their bank's activities. So even if we consider, if we take the UBS and Credit Suisse data that is available, it's not really, it doesn't really give a complete image of their activity. It gives just a very small activity on their European, on the part of the company that is considered European. And that's why we couldn't consider it.
Okay, so unfortunately, we cannot compare this result for UE Bank, European Bank, with result. Do you have any idea about the US?
Because for the US, it's also the same. We have data on the JP Morgan and some other banks, but also it's the same problem of Switzerland. It's gonna be only the part of JP Morgan that is in the EU. So also like a fraction of the activity. And I'm not sure which...
My question is about, can we imagine to have a similar database for the US? Maybe Manon or Thierry, do you have any insight about that? Because the European Union is an example now, and other countries can do the same. Have you heard about something in the US or elsewhere?
No, I have not.
I know, like it's been an ongoing debate in the US as well to try to get similar public country by country reporting. They've failed so far. They're trying now again to push with the Biden administration. Also taking the example of the EU, indeed, that has been able to do it, which is, by the way, for me, an argument, because you know, when we first came out with the idea of public country by country reporting, it probably was like 15 years ago or something. It was at the time, it was clear that they would, sorry, because my image is weird. Now it's better. 15 years ago, when we came out with the idea, and you know, organization tried to push for it at national level. And I do remember, even when I was working at Oxfam back in 2012, 2013, it was in the commitments of François Hollande. So we tried to push it, and the argumentations that they were using is that, oh, we shouldn't be doing on our own. We need to be doing it at the same time as the European Union. And then when you have the discussion at the European Union, often they tell you, well, this needs to be discussed and agreed upon at the OECD level, and therefore at the global level. And as long as the US are not doing it, it's not worth doing it, etc. Which I think is the wrong way to take it, because we've proved it that for public CBCR, precisely, it's been France doing it first, then it's been the whole of the EU countries. Now, we did not mention it, but actually country by country reporting exists, but it's not public. So tax administration exchange those information that make it useful, by the way, to calculate the tax deficit that the Observatory has been presenting. The tax administration, so let's take the French tax administration, has the information on all companies, including non-French or non-EU countries, which is interesting. So now the next step is just to make this information public. It always takes a long time, but I think once again, with the EU moving on, although it's not complete, as I said earlier, hopefully this will show the way for other countries, for the OECD, for the US, and global tax transparency will be a standard, hopefully as well with, you know, a common database that will be data friendly and easy to use as well.
Yes, we hope, but I'm really surprised that when we talk about tax 7, we have nothing from the ECB. They are completely silent about this topic. Manon, it was your first point. You said we have the database, but now we need a European official database, not something we collect by ourselves. And I'm really surprised that the ECB did not take any step in this direction to provide this data. It is one of the missions of the public authority to provide open data. So have you heard anything about the strategy of the ECB or maybe the European Banking Authority? I don't know, but is there any kind of strategy?
Is the question for me, Gunther?
For everybody.
Because I don't want to monopolize.
Thierry, maybe.
Yeah.
Thierry, maybe. If you do not have any insight, it is because there is nothing. So.
Yeah, I don't want, and I cannot speak for the ECB or EBA, but if I were to guess, I would say that they do not see this particular topic in their mission. I may be wrong. They don't have any mandate to speak on their behalf, but I don't think the SSM, single supervisory mechanism, which is, you know, effectively the branch of ECB, you know, doing you know, supervision of large banks. I don't think that they see the tax dimension in the, you know, they're very much focused on supervision, financial stability, resilience of the banking system, etc., etc. I don't think they focus on this. I'm not even sure they have the data, but I don't know. Obviously, I don't know.
Let me test. We have 100 person actually. Is anybody from the Banque de France or from the ECB in the audience? You can by chat if you. Okay, but I think Mona and Giulia, maybe you should present this paper at the Banque de France or at the ECB. You can propose to present this paper. I think it will help. It will help. So maybe just an advice if you can. Yes.
Do you hear me? Wait, do you hear me better or no?
Try.
Yes. Tu peux parler ou pas? Ah non, mais j'entends pas rien. Ok.
I'm very sorry, Anne-Laure. It was confusing.
Now, can you hear me? I hear you better. Okay. No, just my very quick experience. I had to comment some figures in a report which were concerning a French multinational. And so I spoke with ACPR, which is the supervision bank branch for the French Banque de France. And the people I had on the phone were actually not concerned with fiscal. It's absolutely not in their mandate. Thierry is totally right, because the mandate of ECB, Banque de France, and all these supervisory agencies or institutions, call it whatever, they include just the financial stability. So if you want to convince them to be concerned with those data, you have to convince them that it will impact, that it affects financial stability. But it's totally out of their mandate to me.
For IDECI, the reason is that it is a fiscal and it is a fiscal policy. It's about fiscal policy, so it is about tax administration. But of course, we discuss about tax 7, but it is not tax 7. It is a regulatory and tax 7. So this is a problem for financial stability, of course. We have also one question, but after I will leave the floor to the observatory, because the observatory has a lot of work in progress, so they will present the next step of their work. But a final question is about the consolidation process. David asked about the consolidation. You know, about subsidiary of subsidiary of subsidiary of subsidiary. Is it possible to have the whole picture, the whole picture, or not?
This question is for us, I guess. Yes. So actually, the issue is that this data, when you look at any of the reporting of any banks, it is by country level, so we cannot really see each affiliate, what is it doing. We can only get like a sense of what is this bank doing in this specific country. And therefore, we took the data as it is and we analyzed it. But maybe from other sources that I'm not aware of, this exists in a more detailed way, but I'm not sure. Or even if it exists, it would miss the tax havens. So of course, the data, the PCR data are not perfect, but they are the best snapshot that we have now to analyze at least to analyze the behavior of banks, you know, abroad, outside the EU, in tax havens. Yeah, this is what I can say about it.
Yeah, okay, so thank you. There is obviously there are a lot of questions. Sorry if I cannot answer to all of them, but of course you can contact the observatory if you have any question. And now I want to thank Nicolaides, and if you want to have the final word, the conclusion.
Yeah, thanks a lot. I guess you would agree with me after seeing everyone has seen many events during the pandemic, but not only was this event very informative, but it was one of the most efficient that I've seen. And I think you would agree with me that it was packed, 1.5 hour packed with lots of points, very interesting research, and very interesting dialogue as well between the participants. I would like to thank everyone that participated. Before closing, I would like to just give a quick heads up on our planned activities. So on the research front, there's a new report that is coming up at the beginning of November. And this report will focus this time on the state of tax competition in Europe. Namely on the different incentives and schemes that are currently in place in EU countries to attract individuals from other countries, including from within the EU. Then on the conference front and workshops, we also have an interesting conference coming up at the end of September, which is on the fiscal and distributional consequences of global tax avoidance innovation. And it brings together leading researchers and policymakers from all over the world. I think this is a unique event of its kind because usually you either have policy events or academic events, but this one combines both. And so there is added value between collaborations. And it is a joint work. It is organized jointly with the Joint Research Center of the European Commission and DG Taxud. And then you can find all information about our current studies and planned events as well in our website, www.taxobservatory.eu. And we also encourage you to follow us on social media and subscribe to our newsletter, just to keep in touch with the latest studies and events that we will be planning to do, because we keep adding all the time. So with this, let me thank everyone for attending. Let me thank the presenters, the panelists, and hope to see you soon in our future events. Thank you very much.
Thank you very much.
Thank you.